Hello and welcome to another Uncomplication. I'm Ryan, and oh shit, is he looking at a Bitcoin chart? Is he going to talk about crypto today? Is he going to cry in front of the camera? What's he going to do? I hope you've been enjoying this journey, and I'll tell you that when I come and make these crypto videos now, they're fewer and farther between by design because I'm really trying to transition out of caring about this stuff as much as I have. And instead, I've got a lot of guests lined up and conversations that I'm really excited to have. And so I hope that you've been enjoying that. I know a lot of you have. And when I make a video like this, it's simply because more people are going to watch it. And so I can ask more of you to join my Patreon at patreon.com/uncomplication. It's a great way to support my ongoing efforts. And in return for that, I am going to offer you my crypto-flavored musings for February 12th. All right, let's dig in. So, couple things that I've been paying attention to loosely, some thoughts I wanted to share. The first is I just want to draw a line here that I think is an important one. I'm going to make a horizontal line right about where price is right now. If you look at what we have done around this $42,000 mark, I guess the line was coming in right around 41, 42,000. I mean, this has been a place where we have seen a lot of interaction, and we are coming up on it again. And I just want to make a couple observations. So the first thing is that the pattern that we have seen now a number of times in crypto in this last market cycle is one where we have a call it a downtrend, call it an accumulation, a consolidation range, whatever you want to call it. These moments when price just kind of blast off somewhat unexpectedly, but you can see these big green candles on my chart. They're blue, but we've seen this type of activity quite a few times. And we've seen it again in the last few days. We definitely saw it way back here. And I've just been noticing where in the chart these have happened before and what tends to happen immediately afterwards. So if I come in here, let's play with some colors. Let's just say here's our green big blast off candles. So there, we kind of blasted off in here. This is definitely one of those moments. And again, here, that was the one that really faked me out for sure. And then here we are again. So if you just take it at face value, every time we have these big escape velocity vectors and YouTube is going crazy and Twitter saying, all right, this is finally the moment, bullhorn's back on. I even had a comment in the last video. Someone was accusing me of being a bear market cheerleader. It was something that was very bullish, but for the bearish outcome, I don't know. But every time we have these big escape velocity candles, people get really excited. Well, every single time we see that, it's followed by a retrace. And pretty much without exception so far, this one was kind of a little retrace back up. Pretty much without exception, what typically happens in this pattern that we see, and I'm going to talk about why I think we keep seeing this pattern, but it gets us into a distribution zone. So big candle up, and then here was our big first Wyckoff distribution, and then here was our next one, and then we had another big escape candle, and it was another distribution. And so now here we are again. We've had this retrace. And so I'm fully expecting to see another nice little distribution. And again, what happens every time is on the back side of this, price crashes back to these kind of previous levels. Here's that bottom. And, I drew this line here. So when we blasted out of this one, we came back down here. We came back down here again. And so there's no reason for me to think that we won't see that same distribution with a price then trending down lower, coming back to some of these earlier zones. So I know that's not what, people who are wanting Bitcoin to go to the moon want to see. And I know this looks like a lot of scribbledygook, but it's just that recognition that when we have these, let me just kind of clean this whole thing up again. When we have these, real quick price jumps up, actually let's start here, it's always with a retrace and then kind of a distributive top every time we've seen it. Oops, up, down, up again, distribution, up, down, up again, distribution. And now we had this big blast off down to that support that I was talking about, another distribution, and again, it always follows kind of a retrace back down. Okay, so in the last video, and so what I'm kind of drawing here is sort of my prediction of what we're going to see just based on these patterns. And I think it's kind of cool that, again, I keep going on about just how beautiful this Wyckoff distribution was. I mean, it is a textbook diagram, both the distribution and the accumulation. And I'm thinking this is almost like a jazz solo where we sort of introduced the main theme and now we're seeing variations on that theme. But we have the same ingredients. It's all one consistent thought. And I think that these types of patterns that we're seeing are really indicative of what crypto is likely to do moving forward. As I mentioned in a past video, we've been seeing these real parabolic Bitcoin bull runs that then come down into a bear market, and then another bull run down into a bear market, but they're very parabolic. And this time around, we've seen, this pattern here, the distribution, and then the accumulation, and then the reaccumulation, the redistribution. So more mature patterns. And if we look at the sort of exponential regression of Bitcoin. Let's go to the BLX here. Look at this logarithmic regression of Bitcoin. The logarithmic regression is a curve where the relative, amplitude of the moves is getting smaller in an exponential or a logarithmic regression. So I'm pretty sure I have this on here. It ends up being this, let's go to the weekly. Yeah, see how we've got this curve that from Bitcoin's inception, we had this real insane price movement, from 0.05 cents up to that first market cycle peak was a 58,000% price increase. The next time around, from the bear market floor up to that next market cycle peak was about 11,000. And then the next time around, it was about 1,600. So each time we go through these cycles, we're really reducing the percentage gain from the start of that bull run to the top. So 369% from about bear market floor to the peak this time. And so all this means to me is that as much as we might want to believe in these parabolic moments, I think that this is the maturing of this asset class. And so where we used to have these big, boom into the bear market, boom into the bear market, boom. Now we are more just kind of finding as more liquidity providers, more exchanges, more mature interests get into this market, it compresses that volatility. And so that's the way that I'm kind of looking at this. I'm sorry there's so much drawing on here. I wish I could just get rid of these and keep my halvings. I think I have that on another chart. Let's see here. Okay, that's clean enough for me. Clean enough for laundry day. Let's zoom out here. Let's take a look at, this is on the logarithmic scale, remember. So it kind of has built into it that relativity, the relative scale of these moves. And you can see, here's the halvings. And typically these market cycle peaks come about a third of the way from one halving to another. So we had one here, we had one here, and there was a little bit more in the middle. And now on this cycle, we're already kind of almost to the halfway point of this halving cycle. And I think we might have seen our peak here. Who knows? There might be something else going on. But you can see just the difference in this parabolic move to the crash back down. And now we're getting into this kind of, sine wave. But I think that this logic still applies, this need, this desire of the market, and the ones that are really playing hardcore here are wanting more than anything to get prices back down, to dissipate interest so people are not coming into Bitcoin, so that it can be accumulated, because look at this pattern that has happened now 3 or 4 times. 1, 2, 3, this is the 4th. This is a very repetitive and profitable pattern, and it requires that the price come back down so that it can be accumulated, building that cause. Remember from Richard Wyckoff that stocks or an asset will move when there is enough of it that is all held by the interests that want it to move. And once they've got a bunch of it all stored up, that's when the narrative change happens. That's when all of a sudden we are going to, $250,000 or whatever it is. And then I think we'll see a lot more funny business, getting it trapped in that high range. By that time, in 2025 or whenever that happens, there might be completely different interests in the market. It might be even more mature, even less of a parabolic move. There's blood in the water. I think a lot of traditional financial players are coming to crypto because it's a 24/7 casino, unregulated, high speed, everything. And this is just the maturing of a market. So, okay, that's that. And, if I'm making predictions here, which I try not to do because at the end of the day, I really don't know what happens next. I just tend to think in these, what's the why? Why are these things happening? I know everyone wants to talk about, the fiat currency collapsing and Bitcoin being our only hope for humanity. And, all of the, what I would call marketing for crypto drives people to buy it. And you have to remember that when you're watching a news channel and they're talking about this is a great time to buy crypto, it's, going to the moon. When you hear those news stories, what they're really saying is that it's a great time to sell to you. The interests have already built their causes, and if you're hearing about it in the news, it's because it's time to sell. So we're, as retail investors, we tend to think about the market backwards. When it seems like a really good time to buy, that's when you should be selling. When it seems like a horrible time to buy, that's when the real interests are buying. And so on that note, I want to share with you just a few more insights that I think are interesting, things that I've come across from other people that I think might help you in framing your trading brain. So I saw this the other night. I was looking at a video. I'll put the link in the description because it's a great video, great channel, great individual. But he was talking about why do people always get stopped out? Why does it always seem to happen that when before there's a big move, there's always this kind of test that blows out everybody's their stop loss, wicking people out. And I liked what he had to say. So basically, think about what the retail investor is taught. We're taught that when there's these lines of support and resistance, the more times something comes down and finds support, 1, 2, 3, 4, this is a place that you want to set your buy orders. This is where you want to enter these trades on these levels of support. And because retail investors are, typically we are putting too much into any given trade. We are overextending ourselves. We are taking too big of a risk. And as a result, retail traders tend to have these really aggressive stop losses that are right below the zone, because that's what we're taught, right? If it's a losing bet, you should cut it and run as quickly as possible. I'm trying to find let's draw a square down here. So here's the stop loss zone. This is where all of the retail traders are setting their stop losses. And so, okay, so here is just an ideal support and resistance situation. And now we've got all of these bounces along the support line. And so it's a place where it's obvious to the exchanges, and the exchanges can even see all of our data. They know where all these stop losses are. So this is a big area of liquidity. It's all here programmatically ready to sell if price breaks below this zone. And so for the large interests that understand this game and they understand, they want to fill an order of, $15 million worth of Bitcoin or whatever, if they just came in at any one of these given moments and just started buying Bitcoin $15 million, the price would go up and up and up very rapidly. So instead, they are there waiting for these moments where there's this big zone of liquidity. And when I say liquidity, it's their ability to get people to sell. Because remember, you can't buy anything unless there's people willing to sell it. And a stop loss is a built-in programmatic. All of these people are now lined up. They think it's going to go long. It's going to bounce away from this line of support. And so what happens? It wicks down. And now all of those stop losses are stopping people out. All of that liquidity is getting filled. And so, this happens quite a few times when we're in these support and resistance zone. So they're filling that $15 million order by wicking out everybody programmatically, having them sell, and then we blast off. So for the retail trader, we entered a position here with an aggressive tight stop loss because we were trading with probably more than we should have been, and we want to be really tight and conservative. And so all they have to do is punch down a little bit lower, and now they're filling their bags, these huge pools of liquidity right before price takes off, and then that's what's being distributed. That's what's then being sold that brings the price back down. So my only point in saying this is, there's nothing nefarious or evil happening here. It's just a way to be highly profitable in a market, and it's just unfortunate that the retail traders, if you go on to Google and I'm paraphrasing a lot of what's in this other video. You should check out the link. I give that gentleman full credit, but we're taught to trade in a certain way, and that makes the retail trader highly predictable. The last little nugget of wisdom that I want to give you, coming from Tino and Traders Reality, his channel, one of the best on the internet as far as just day-to-day watching the market move and understanding that behind the scenes, why is it moving this way? What are the interests? How are they using these psychological patterns over and over and over to make a huge amount of profit? And okay, so I'm going to kind of paraphrase this. I'm not a huge expert. It's something I'm really still trying to wrap my mind around, but bear with me. So let's repurpose, or let's draw a new box here. So here is now an exchange. Okay, so here is Binance. Let's just make it be orange. And here is a happy little retail investor, retail trader. And over here on this side, ooh, look at all these cool pictures. Let's find like a building, like an institution. Who can see it first? I spy with my little eye. We'll just put just a big suitcase here. So here are, these are the market makers, okay? So the funny thing is that you can go right now and you can Google, tips for market makers, and you can find a whole world of published articles about, different algorithms, how to be a better market maker. Market makers are in every market, and what they do is they provide the liquidity to the market. The liquidity is the availability of that asset to be bought or sold on an exchange, because the exchange itself, they might have some surplus, or they might be holding their own supply that they can buy and sell, but they're really relying on these larger, sometimes these are investment banks or hedge funds or wealthy, whalish individuals that are, and this is what it actually means to mature as a market. These are the people that are coming in and in this long period of accumulation, they're not just holding it. They are the ones that are taking up that percentage of Bitcoin's scarcity and then coming back and creating a market with it that can be profited from again and again. And so what is happening here is that when you come and buy Bitcoin at the market, you can come in night or day, 24/7, regardless of what the price is, and there will always be Bitcoin there to buy, so long as the liquidity providers are providing that liquidity. And they are buying it at a certain price, and they are offering to sell it for a certain price, and that difference is the spread. And the less liquidity a market has, the bigger that spread is. They will sell it for a certain price. Let's say they'll sell it for $110, and let's say that they'll buy it for $90. And they're able to, just by having these ranges set and providing that liquidity, buying and selling, just from the spread itself, they are able to make money. That's great. That happens in a lot of stock markets and places. And the more liquidity providers, each one of this is a different organization, is kind of how I'm illustrating this. And the more of them there are, the tighter this spread gets because there's more competition. And so maybe, they'll buy it for 105 and they'll sell it for 105 and they'll buy it for 98, whatever, because there's more competition, there's more people that are taking these bids, and so you get these tighter and tighter spreads. Okay, but the thing that is even more interesting and that I've been trying to wrap my head around is that when we come to an exchange and we buy Bitcoin, let's say the price is, we just kind of came out of this W pattern and we're blasting off. Okay, so we buy right here. Okay, when we buy at that spot price or we fill that order, the liquidity provider is stepping in and saying, "Sure, great, I will sell you that. I will sell you that position, and when I give you that position as a long, because you're thinking price is going up, I will sell you that, and at the same time, I will open up a short." I'm not sure if it's the exact same time, but essentially they are providing the liquidity and they are able to set their shorts while most of the retail investors are setting their longs. So with that short then set, let's just get rid of this. I need more space. I'm doing my best to describe what is, even to me, kind of a mystifying concept. When we get into these sort of distributive type zones and people are buying at these tops is when the liquidity providers are setting up their shorts. And so then the market moves back down in these psychological patterns that come back down and reclaim the liquidity, making money from the shorts, but coming back to these zones of liquidity like we've been talking about up here, so that they can fill their bags and repeat the pattern. So when we see on the chart these moments where we have these pools of liquidity that are kind of set by the longs that are set up, it always happens that we go on this little ride and then we come back down to collect, to re-up the market makers, restock their liquidity so that they are able to keep this game going. Because if it was just hey, come to my flower shop, everyone buy a flower, then the flowers would all be gone and the price would just go up and up and up and they would never be able to restock the shop with flowers, right? So instead what happens is they sell the flower, everyone is loving it, it's going up and up and up, and all of a sudden that flower starts smelling really bad. And so everyone's like, oh crap, I got to get rid of this stinky flower. And the market makers are able to buy it all back and now they've restocked, and then the psychology can be repeated. And this is happening over and over and over, day to day to day, in these patterns. So again, I get back to, so what? What does it all mean? It just means, I think, be careful. have clear eyes. Understand that when you hear about how great Bitcoin is and how everyone needs it, and how if you don't have Bitcoin, you're going to be poor in the future, and Bloomberg is talking about it, and everyone's saying Bitcoin is a wonderful thing, what they're really saying is it's time for us to sell you Bitcoin. And when you hear, oh, this is awful, China's banning it, and it's going to be banned by the U.S. government, and anyone who holds crypto is going to be on the pedophile list, and whatever they can do to scare us away from it for long periods of time is exactly when we should be buying, because then the cause is built, and the next time we have one of these big market cycles, which we will no doubt have, because it is built in, it is beautiful, and it is a great way for a market to just have this built-in narrative that happens every 4 years, where we can have another 4-ish years where we can have another big scare everyone away, it's all acquired and accumulated, and then boom, we blast the price up, and then we sell, we bring it back down, and then we acquire, and then boom, we blast it up, and we sell, and then I think that's what Bitcoin is. And that's not to say it's not cool. That's not to say it's not valuable. It's exactly what stock markets do, and everything else. It's just kind of separating that moonish fantasy from the day to day. I think that moonish fantasy is still there, in that if we go back to the BLX and we look at the zoomed out chart, again, we are looking at an asset. Let's go back to the weekly. An asset that just keeps going up and to the right. So there's really never a bad time to buy Bitcoin, so long as you can hold on to it. And so this is the picture as I see it. I see an asset class that is moving up and to the right. I see and hear stories of these crazy fortunes that have been made, but I also see a logarithmic regression that is making these moves tighter and tighter. More players in the market, more algorithmic trading, more liquidity providers and exchanges really being the ones that are fulfilling that vision that has been talked about every time of a maturing marketplace. I think that we're seeing that. And so now it's just up to us to come into it with clear eyes and understand what that means and what it doesn't mean, and to filter our information maybe a little bit better. Think about who is telling me this and why. What's in it for them? When you are on the Twitter sphere or the YouTube sphere and you hear someone talking, what's their interest? What's their motivation? And now, so there's no mystery, I'm going to tell you mine, because I am coming on here. I feel like I'm taking some risks just in sharing information that I think is valuable to people. And I wouldn't be doing it if I hadn't heard so many stories of the real human drama that unfolds when people get sucked in to do the wrong thing at the wrong time, and they materially hurt themselves. I've talked to people who have lost their families, who have lost their homes, who have been very injured by the pageantry and the gambling nature of this market. So I'm coming here just sharing the insights as I see them. They could be right or wrong. It's just how I see it. But I'm doing so for a specific reason, and that's because I have my entire life desired to talk and to share and to listen and to find the stories and the artists and poets and believers. And when I say believers, I just mean people that believe that life is worth living, and here are the reasons why, and here is the beauty that everywhere surrounds us. That is why I'm here making this crypto video, because this is a stepping stone for me to realize that vision. And if you're here listening to the end and you've been following me on this journey, I want to thank you, and I want to ask for your support. Be a patron of Uncomplication. You can go to patreon.com/uncomplication and directly support my efforts. I don't put any ads in these videos. I'm not playing the YouTube metrics the way they want me to play them. I'm actually celebrating when I see subscribers go down, because I know the people that are sticking around are the ones who really want to be here. So for all of you, a huge heartfelt thank you. It's been an amazing, crazy, topsy-turvy journey, and it's only getting started. So I can't wait to share with you the interviews that are coming up. It's going to get wild, and I think it's going to be a lot of fun. And don't hesitate to reach out, rs@uncomplication.com. I'm just looking for all the means that I can to make this thing go. So if you're an interesting person, you have a story to share, let's talk. If you resonate with me and who I am and you want to support more directly, let's talk. I'm looking for the universe to provide the path forward, and I feel like this is it. And if I can keep coming on here and just sharing these little nuggets of value with you, I hope that also, in turn, you will go with me on this journey, and you will, be a supporter of uncomplication. Bring some uncomplication to the world. And now I'm going to get back to my life as I encourage you to get back to yours. And until next time, cheers.